Hey everybody, it is Saturday, November 14th, 2020. My name is JJ, and you're watching Bull to the Bust financial economic news channel. And let's get into some housing again today. Real estate news. Going to talk about home prices, the inventory, how many people are not paying their mortgages, their rents, and where prices may be headed. And here's a hint, this chart really shows you what's happening and what's likely to continue. But we're going to talk about some possible headwinds and changes that we may see implemented here in the near future that could change the direction of the housing market. So a lot of good news to get into. Let's get started. Right, recent update just came out yesterday. Housing market, home prices climbed 15% year over year. Even as sales started to slow down a little bit as we enter the fall, the winter season here. However, pending sales are still up year over year by over 30%. Now, just to recap what we've been seeing in the housing market, we have witnessed a nearly all-time low inventory of homes on the market. We have banks that are more deregulated now than at any point in history. For example, there's no reserve requirements now with the banks, so they don't have to have any money in deposits, and that means they can continue to lend money that they don't have in deposits, and they could go and leverage themselves to infinity since there's no reserve requirement. So it's pretty insane what's happening right now. But that is what leads us to believe that unless the banking system gets restructured, home prices are going to continue to rise because they can continue to lend. Even if half the people lose their homes to foreclosure, it doesn't matter. The banks can continue to lend. But what's happening in 2021 with the implementation of a Biden presidency, maybe we'll see a lot of changes, right? I'm not a political expert. But something tells me that a new president may change this economic system, and maybe new bank regulations will be implemented, and that could drastically change the direction of the housing market. So with that uncertainty out there, I would urge you to use caution in your financial decisions, especially if you're looking to buy a home. Under a Biden president, will he keep this economic illusion alive with further inflating these bubbles, the housing market, the stock market, just the everything bubble is what it's been called? Will debt continue to increase? Will banks continue to be completely unleashed from any reserve requirements? We'll have to see. But let's look at some more numbers and data on the housing market. Now, first of all, let's talk about prices. The median home price, which increased 15% year over year, is now at $321,500. That is the highest on record. Right? There's people out there still saying that this isn't a housing bubble. Now, it is a housing bubble. When you look at the previous housing bubble, 2007, 2008, that crashed. But home prices are higher now. So saying it's not a bubble now, you have to go back and say that the 2007, 2008 market was not a bubble either, because prices are higher now. But just because something is in a bubble, again, it doesn't mean that it can't go higher, right? The banks can be further deregulated. Right? It's hard to imagine much more deregulation than they already have, but they can continue to loosen the lending guidelines. And as long as the Fed is there to ensure and to guarantee endless bailouts and allow the banks to continuously loan out money that they don't have, then the sky's the limit. All right? It's all about the Fed and the monetary system and the fiat currency that we're still under right now. And here is a recent chart just to look at the price action here. And this is out of Redfin. And we see to the far right here, as of November 8th, we're at that 321,500,000 mark. And we see compared to previous years, this was an enormous run up in the home prices. And to be honest, I think we're one of the only financial channels that predicted this housing market to prices to continue to increase. I saw a lot of videos out there, a lot of so-called experts saying the home market's going to crash, the housing market's going to come down. It's not that simple. Just because prices are too high compared to incomes, it doesn't matter. It's all about the lending and the fiat money monetary system and the fractional reserve banking system. That's everything to do with prices. Okay, combine that with millions of people that don't have to pay their mortgages right now, so that's going to prevent many foreclosures that normally would have occurred during this lockdown recession that we've been under now for about 8 months. Combine that with the fact that rents don't have to be paid. And just think about if all of these landlords were to evict tenants, if they were allowed to do that. They're still doing it in some cases, but if they weren't being discouraged from doing that, you would see millions of new homes become vacant or rental properties become vacant. Rent prices would come down drastically if that were to happen, and that would discourage people from buying a home if they can just rent for, a fraction of what it is now. If rents drop 90%, a lot of people choose to rent instead of going out and taking on a huge mortgage and buying a home, right? So a lot of factors here together are creating this monster bubble, and the bubble is likely going to get bigger. But again, what do you think about the new presidency? If Biden comes in, is he going to change things? Is it going to be bigger bubbles? You let me know. I'm not a political expert. Let me know down below. Maybe we'll see new banking regulations implemented. We'll have to see. Interesting bit of data here, still out of Redfin. 39% of renters lost their job or wages due to the pandemic, 30% versus 30% of homeowners. And we're not out of the woods as far as the mortgage forbearances. There's still over 2.5 million people that are not paying their mortgages. They're in forbearance. Let's take a look. All right, here's the chart. This is out of mortgagenewsdaily.com. We see the active forbearance plans. Now, it starts here from right around the time of the shutdown recession, the lockdown recession in March of this year. And if we look at the blue line, that's the total of forbearance plans between Fannie Mae, Freddie Mac, FHA, VHL, and other loans. And we see that it did surge up to about 4.75 million. Since then, the number of mortgages in forbearance has dropped, but we're still not out of the woods. Look at pre-pandemic and look at now. We're still at about 2.75 million homes in forbearance. That's a lot of homes. If you see over 2 million homes hit the market because of foreclosure, you're going to see massive price corrections. Now, again, it's anybody's guess. Will the powers that be, the decision makers, will they allow people to continue into the new year, into 2021, and not pay their mortgages? Are they going to extend it? Now, I know what a lot of you are thinking. You're thinking, hey, JJ, what's the deal with all these what ifs? What if this? What if that? What if this? Why don't you just tell us the direction of the housing market? Let me explain it again. In a manipulated market, when you have bureaucrats and people dictating and steering the direction of the market via their non-free market rules and manipulation and regulations, then it's impossible to know, because you don't know what the plans are of the people that are steering this economy, right? The puppet masters. You don't know, right? If you do know, let us know down in the comments. Will they let this collapse? Will they continue the infinite bubbles? Nobody knows, but we do know what's happening in the real economy. People are still having a very hard time. I mean, come on, 2.75 million people can't pay their mortgages or are in some sort of forbearance. And you can argue, well, they can pay their mortgage. They're just choosing not to, and they're going to stay in forbearance just so they can save up extra money, possibly. But we could see big trouble. I mean, depends on what happens. But landlords, they're struggling to pay their own bills because of all the tenants that can't pay their rent. What's going to happen to all these small landlords, these mom and pop homeowners that are renting 1 or 2, maybe 3 homes out or apartments out? What's going to happen to them if the renters do not start paying their rents? Okay, will the banks not foreclose on someone's second home or third home or investment properties? Is it just going to be their primary home, right? All of these questions are still out there, and no one really knows the answer. Recent article here out of Forbes: 1.3 million American households could owe over $7.2 billion in unpaid rent by the end of the year. Is the economy coming back so strong that all these people are going to be able to get caught up on their rent? I don't think so. I don't think anyone believes that. Especially with what's being talked about. They're talking about another 6-week lockdown as the quote-unquote solution to the illness, and they're saying that's going to revive the economy. Once the illness is gone after 6 weeks of lockdown, they're saying that's going to be a new economic bull market, which is complete BS. I think most of you know this. Complete insanity right now. This country is headed into some very dangerous waters, some very dark times. No one really knows exactly how bad it's going to get, if there's going to be any solutions, or it's going to be more of the same, infinite bubbles. Whatever the case, prepare yourself because we don't know what is coming. Again, if you do know what's coming, if you're a mind reader, if you know what the bureaucrats, the puppet masters are going to do, let us know down in comments so we can all look, we can all learn from your knowledge, from your insights, from your crystal ball. Maybe you have a crystal ball. Thanks everybody for watching and support. Happy Saturday, happy weekend. We'll hope to see you on Monday. Bull, boom, bear, bust. Peace.